Welcome to Livewire's Fund in Focus. My name is Vishal Tekshnani, and today we're putting the Resolution Capital Global Listed Infrastructure Strategy into the spotlight. Joining me is Resolution Capital's Sarah Lau to discuss opportunities in the global infrastructure space. Sarah, welcome.
Hi, Vish.
Talk to us about the investing philosophy behind your fund and how do you approach investing?
So firstly, we see listed infrastructure as a really attractive asset class. Historically, it's generated equity-like returns with a risk profile somewhere between bonds and equities. At Resolution Capital, we've been investing in hard assets for over 20 years, and we're very proud of our consistent track record. We are applying one simple fundamental philosophy to all assets, and that's because, like property, infrastructure is really underpinned by hard assets that are generating economic rents. So the philosophy that we're applying for infrastructure is that we're looking for quality assets, and by quality assets, we're really looking for optionality upside that's underappreciated by the market. We're also looking for strong balance sheets, and we're also looking for strong management teams with skin in the game. So we believe that this can add value to investors for this asset class that has generated strong returns over time.
Talk to us about how you identify these quality assets. You've got a lot of names. How do you pick what's the best of the best?
So the best of the best, if I look at a wish list of what I want, really it's about, firstly, we need assets that are critical to the economy, so that provides a really resilient cash flow stream to investors. And the other thing that we're looking for is monopoly-like barriers to entry. So that has really strong pricing power that insulates investors from the impacts of, say, inflation, and really exposes us as investors of these assets to growth over the long term from really strong secular tailwinds like decarbonisation, digitisation, the growth in energy demand.
Okay. Now, congratulations on listing your strategy on the ASX. Curious as to why you chose an active ETF structure.
Active is really important in global listed infrastructure because we feel that benchmarks are challenged. Firstly, when I look at our investable universe, 25% of that is not in the benchmark. That is missed opportunity for investors. And then secondly, the benchmarks often include names that we feel don't have adequate monopoly-like characteristics. So it's not giving investors the protection that they need. So active is important. Listed assets give investors the liquidity that they need, and we feel that an ETF really enhances the convenience for our clients.
Okay. Now, as an infrastructure manager, you've got access to a wide set of sectors, everything from railroads to airports. Where are you seeing the best opportunities right now? And feel free to give me some names.
So the best risk-adjusted opportunity for us right now is in electric utilities. I've mentioned electricity demand growth, which we haven't seen for 2 decades. Clearly in the market recently, there's a few more question marks on how much city demand AI actually needs. We're still in the very early stages. So we feel that what we've baked into our forecast from now to 2030 is conservative. And the beauty of investing in real assets is that we don't need to be picking the ultimate application. And there's a whole bunch of nascent technologies behind AI which could need more power as well. And this is on top of a super cycle of investment that's needed for the energy transition. So we still feel very comfortable with electric utilities, which are monopolies, and they generate a allowed reasonable return on the investments that are needed. And these investments are accretive to shareholders.
Powerful thematic. Can you give me one more?
Another thematic that we like over the long term is mobility. Really, it's about the urbanization of the population and the movement of goods and people and things. So things that are continually benefit more from this include airports and toll roads. As the utilisation of these assets continue to increase, we think that the returns on these assets will improve.
Global listed infrastructure from a strategic asset allocation perspective. Can you talk to me about the benefits of including this as part of a broader diversified portfolio?
Listed infrastructure along with property, they both fall into their alternatives bucket, which provides a good inflation hedge and diversification for investors. Typically, this is included in portfolios at roughly 5%. The benefits of infrastructure is that it is a defensive growth asset class that we see growth accelerating. So the yield right now we're seeing out of listed infrastructure is roughly about 3.5%. That is growing at 9% though. Over the long term, you've got resilient cash flows given the defensiveness of this asset class, alongside growth that is really underappreciated by the market. And as you can see in this chart, the valuation of the sector is in line with historical averages. The market's really missing right now is how fast this growth is accelerating and the longevity of this growth.
And last question on risks. How do you manage risks in the portfolio?
So we are invested in a portfolio. We look at risks in many ways. Sectors, as you mentioned, is one way we look at it. We look at regions. We look at sensitivities to certain factors such as inflation and interest rates. And what we do is build in common sense diversification. We hold a portfolio of between 20 to 45 stocks. And this allows us to be invested in our best ideas and do the sensible diversification as well for our clients.
Okay. Sarah, thank you so much for joining me today.
Thanks, Vish.
I hope you enjoyed this video. Please don't forget to head to livewiremarkets.com where you can access all of our Fund in Focus content. Please don't forget to give this video a like, subscribe to our channel so you keep getting notified of more content like this. My name is Vishal Tekshanani. Happy investing.